The number of Americans that describe themselves as economic suffering is now at the index highest since the poll started to be taken. It is the highest at 2008. More and more people are saying that they're not thriving. It was about 60% in June 2021, and now July, it is 51.2%. That's still pretty good. Half the country considers themselves thriving. But what is concerning is the number of Americans who are suffering from that. There's a few things to mention to you here. Democrats have put in the climate law that could be a game changer. It was in the Build Back Better or Inflation Reduction bill. They put it in at the last hour to pretty much deal with the EPA ruling from the Supreme Court. They now can and have the money to regulate all kinds of things that they say are toxic to the planet. One other thing, Morgan Stanley said, cash looks relatively attractive right now. I wanted to bring in Carol Roth. She is the author of The War on the Small Business and a former investment banker who left the dark side to wield the power of the force on the light side. She's got a new piece out for theblaze.com. Stop trying to turn America into Europe. Europe is self-destructing, and we won a war, so we didn't need to follow suit. Carol, I keep hearing all kinds of warnings about this fall and what's going to happen. I'm really concerned. Are you seeing, is that real? Is that not real?
Yeah, I've been calling it sort of the horror movie economy. I feel like everyone is taking this breather because we've gotten some data that doesn't look quite as bad as the really bad data. And so I liken it to a horror movie where all of a sudden everybody thinks, oh, okay, the killer is dead and we're going to walk back into the shed that has all of the chainsaws. Don't do that. The killer is not dead. That's not where you should be. And so I really think that it is sort of this pause. We haven't hit the depths of the sort of economic recession that is potentially going to come later this year and into next year. And the rolling over of the labor market and some of these bright spots, I think, are going to start to deteriorate. If you just look at the consumer, which is 70% of our economy, they have the personal savings rate is at the lowest level since the Great Recession financial crisis. And we know that credit card debt is up double digits since the beginning of the year. So the financial balance sheet of the average American is weakening. And, all of these things are likely going to come together on top of issues, again, with energy, where we've seen a little bit of a reprieve here.
I saw a story that came out of Switzerland about how they are begging the people to be prepared for what is coming with food shortages and some sort of an economic collapse because of the situation with energy. And I mean, it's spooky coming from the Swiss, who are usually just drinking their hot chocolate and are happy. When you're talking about poverty and social unrest, that's a little terrifying, and it seems to be happening all over Europe. Are they ahead of us in real economic trouble?
I certainly think they are, because they're also ahead of us in this anti-human flourishing energy policy in terms of, turning over, what could have been a great source of energy and being more dependent on sources, even though we've had some of that here in the United States, certainly not, anywhere near the extent that they have in Europe. And depending on the particular country, we've got countries like the Netherlands, which are huge exporters of food, that are now saying, oh, well, you can't do this and you can't do this, and trying to take away some of the farming at the time when we really need it. So it really seems like there is this sort of anti-human effort that is going on across the globe, starting in Europe and now migrating to America. That's basically like, we don't care if you are suffering, because we have this great initiative that we are, that we're pushing, and we don't care what the fallout is. goods from that. And it's terrifying. I mean, this is something that is terrifying. And it's why it is so important that we push back on that lunacy. If Europe wants to do that, that's fine. But as I said, our founding fathers won a war so that we didn't have to go across the pond and take dictation from them. We need to say, no, this is not the path that we're going down. And unfortunately, it's the path that the Democrats want to go down.
So I was talking to Vivek Ramaswamy. How much of an impact, he told me $250 million in the first 2 weeks. How much of an impact do you think this can have on moving us toward energy companies saying, I don't care what BlackRock says?
Well, the big energy or the big asset managers, I think between the big three have, something like $20 trillion in assets under management. So 250 million is a valiant effort. And I'm not trying to downplay it because we need to start somewhere. But, it is currently a drop in the bucket until it gets some scale. And I think it's important. And I think we need to have more companies that are doing that. The thing that you have to understand about companies is that they are economic animals. And when it is no longer to their benefit to be pushing this ESG stuff, it starts to go away. It starts to go sideways. Mm-hmm. And so it's really important for all of us, whether you have your money in a pension fund or 401k that's managed by a third party, whether you're directly investing, you should be writing to these companies and saying, we don't want this. We want to have human flourishing. We want to have a variety of energy options. And if you continue down this path, pull your money, because the economic pain is the only thing that is really going to shift and change this.
So I was looking at the stability of the world. We have Joe Biden, who is not stable. We have Vladimir Putin, who looks stable. However, with the bombing over the weekend, it could go unstable. I really believe that was probably an inside job, but it may not have been. If it is Ukraine, we're going to be blamed, and things are going to get really ugly quickly. There's something else, too, that nobody is talking about. The election of President Xi is coming up in November. This is the last election. He doesn't become a permanent dictator until and unless he is elected this last time in November. And when Nancy Pelosi went over, if you remember, the press was saying, oh, Xi won't stand for this. He'll shoot her plane out of the sky, which were crazy things. However, I'm told from people that have connections, deep connections in China, that this was the pushback on Xi, trying to get people to say he's weak and dishonorable, because to say he allowed this to happen. That's why they were pushing these extreme scenarios in all of their press. So the entire world is unstable. And Vivek did an email or a podcast with me a couple of weeks ago, and he told me about the investments in China and how they're really shell organizations. You're not really investing in China. And I'm not sure people really understand that. And if China wants to pull out and wants to cripple us, wouldn't all they have to do is start to enforce the laws of there are no investors that are foreign?
So yes, there are. Anytime you have a foreign company that is listed in the United States, there are a couple of different entities that may be involved where you don't necessarily have direct ownership. An ADR, an American Depository Receipt, is sort of a claim on shares that are done through a bank.
Wait. ADR, that means you keep your money on deposit?
So what it means is that there's an intermediate bank that goes and has sort of a foreign subsidiary. They buy the shares and they issue you the claim on those shares. So, and this is done, by the way, by the biggest companies in the world, the Sonys of the world. There are, per the SEC, thousands of these, over 70 countries. So you don't necessarily have direct ownership there. The thing with China is that they have, on top of the ADRs, another layer, these variable interest entities, VIEs, which I think is what Vivek is talking about. And this is a mechanism to try to get around the idea that you can't have foreign ownership of anything in China. The reality of the situation, and I think that the lead that is buried here, is that nobody really has ownership of anything in China because they are a communist country. I mean, even if you are a Chinese citizen and you buy a house, you don't own the land. You get a 5 to 7 year lease there. So the reality is China doesn't need these VIEs to crack down. It can do whatever it wants. I don't know if you remember last year, there was a huge company out of China called Didi. It is their ride sharing company. It's like the Uber of China. They decided they wanted to list in the United States. China was not happy about that. And they were worried that, with audits and disclosures, that secrets were going to leak to the United States. That was their, what they said. But really, they just didn't like the power going over here. And, Didi flouted that power. And what did they do? They opened an investigation. And within months, they delisted Didi from the New York Stock Exchange. And tens of billions of dollars of shareholder value was lost just because China said, yeah, we don't want you to do that. They disappeared Jack Ma for a while, the head of Alibaba, and they put the kibosh on Ant Group, which is their huge financial services firm that owns Alipay, was potentially going to be one of the largest companies in the entire world. So they can exercise this. It doesn't matter about these entities. The fundamental underlying issue is the fact that the communist control. And on top of that, the other thing that we haven't talked about is the rampant fraud that often happens with Chinese listed companies. So, if you're going to be investing in China, that little piece of how it's structured is, one small concern over a whole large set of concerns. It
seems like this is another CDO situation that caused the breakdown of 2008. I think we have a bigger CDO, if I'm not mistaken. We have a bigger CDO problem than we had in 2008, right?
Potentially. The big issue that, in my opinion, that happened in 2008 was when they created these securities. What happened was there were these other entities that sold insurance on the securities that basically said, if something goes wrong, we will pay you insurance, just like you insure a house.
Correct.
The problem is that they sold like exponential factors more insurance than there were products. So it's like if you had 10 houses in your neighborhood and insurance policies were sold on 1,000 houses, then every time one house burned down, you had to pay out for 100. That's really what caused. And not to say that there wouldn't have been a crisis, there still would have been, but what really caused the depth of that was that exponential insurance that was sold.
Did we solve that problem?
I don't know that we did. They tried to, rein it in some, but the reality is there are all kinds of derivative markets that are truly just gambling. And so there is a lot of systemic risk, in my opinion, in the market because there are products that aren't actually tied to that direct ownership of something. And that's why, in the face of you will own nothing from the World Economic Forum, that you want to hold something physical as much as possible. I mean, even with like gold, you want to hold physical gold. You don't want to go buy an ETF because that ETF may or may not even have the gold. It may be a promise. So the closer you can get to an actual physical ownership of something is your best way to ensure that you actually do own something.
Carol Roth. You can follow her at her website, carolroth.com. It's also Carol J.S. Roth on Twitter. You can follow her there. And she has a brand new article out on blaze.com, theblaze.com, trying to stop trying to turn America into Europe is the name of that article you can find now. Carol, thank you so much. We'll talk to you again.